Hi everyone, welcome back to Golden Shadow. The US dollar is falling. But oddly enough, the stock market, it's soaring. Sounds contradictory, doesn't it? But it's not the first time this has happened. At first glance, this might seem counterintuitive, since a weaker dollar often signals economic trouble. But as we'll see, the relationship between the dollar and the stock market is more complex. In fact, falling dollars and rising stocks have moved together more often than you might expect. In this video, we'll explain why this happens, backed by 3 real-world examples and 3 core reasons behind this curious relationship. The dollar and stock market relationship. First, it's important to understand that the US dollar and the stock market do not have a simple one-to-one relationship. They can move independently or even in opposite directions, depending on macroeconomic conditions, monetary policy, and global factors. The US dollar is often considered a global reserve currency and a safe haven in times of uncertainty. The stock market, particularly the S&P 500, reflects corporate earnings, investor sentiment, and broader economic growth. So when the dollar weakens, it doesn't automatically mean stocks will fall. In some cases, the opposite happens. Why? Because the forces behind each are different. A falling dollar can actually boost stock prices, especially for large US companies that earn revenue from overseas. Section 2. Historical cases where dollar fell and stocks rose. Let's look at 3 historical examples where the US dollar declined, yet the stock market experienced significant gains. Case 1. Year 2003 to year 2007. Dollar weakness and stock rally before the financial crisis. The dollar index dropped more than 30% from its 2002 peak. Meanwhile, the S&P 500 surged from about 800 points to over 1,500 points. Why? The Federal Reserve cut interest rates aggressively, boosting liquidity and economic growth. A weaker dollar helped US exporters become more competitive, which supported corporate profits. Case 2. Year 2017. Dollar decline. Amid tax reform, optimism. The US dollar index fell roughly 10% during the year. Despite this, the stock market hit record highs, with the S&P 500 up about 20%. The key driver was optimism over corporate tax cuts and deregulation, which fueled earnings growth. Capital flowed into equities as investor confidence rose. Case 3. Mid-2023. Dollar pullback and tech stock boom. The dollar index dropped from around 115 to near 100. Technology stocks, led by AI-related companies, staged a strong rally. Inflation expectations eased, and the Federal Reserve paused rate hikes, creating a favorable environment for growth stocks. Section 3. Why does this happen? So, why can the stock market rise while the dollar falls? Here are the 3 main reasons. 1. A weaker dollar boosts US exporters' profits. When the dollar falls, US-made goods become cheaper and more competitive abroad. This boosts sales and earnings for multinational companies like Apple, Boeing, and Coca-Cola, which generate significant revenue overseas. Higher corporate profits tend to lift stock prices. 2. Falling dollar signals increased risk appetite. The US dollar often acts as a safe haven currency during global uncertainty. When the dollar weakens, it usually means investors are shifting away from safe assets toward riskier investments like stocks. This risk-on sentiment drives demand for equities and pushes prices higher. 3. Monetary policy and interest rates. Dollar weakness often coincides with a looser Federal Reserve policy, such as rate cuts or a pause in rate hikes. Lower interest rates reduce borrowing costs for companies and consumers, stimulating economic growth and corporate earnings. Additionally, lower yields on bonds make stocks more attractive by comparison, lifting valuations. Section 4. What should investors keep in mind during this period? The relationship between the dollar and stocks isn't fixed. It depends heavily on the broader economic context. Dollar declines paired with strong corporate earnings and a accommodative monetary policy can be a bullish signal for stocks. However, if a weaker dollar signals inflationary pressures or geopolitical risk, stocks might not perform as well. Always consider multiple factors including inflation, interest rates, global events, and sector dynamics. To sum up, a falling US dollar doesn't automatically spell trouble for the stock market. History shows that stocks can and often do rise when the dollar weakens, especially when supported by strong earnings and favorable monetary policy. Understanding this nuanced relationship can help you make better investment decisions in today's complex market environment. If Dow 48,000 becomes a reality, it will likely be the result of multiple forces: tech growth, falling rates, and investor optimism. Which stocks would benefit if the Dow Jones rises to 48,000? Here are some examples from different sectors. Which stocks would benefit if the Dow Jones rises to 48,000? Here are some examples from different sectors. Financial sector, GS, JPM. Industrials, CIT, HON. Healthcare, UNH, JNJ. Consumer staples, KO, PG. Non-FAANG tech, IBM, CSEO. But the big question is, will it be sustainable? Or will we face another correction soon after? Which Dow stock would you bet on in a 48,000 scenario? Let us know in the comments. If you found this video helpful, please like, subscribe, and hit the notification bell for more insights. Let me know in the comments what topics you want me to cover next.